Amazing. Thank you so much, everyone, for making the time to be here today. It really, truly is appreciated. And as I said, as you were joining, please feel free to introduce yourself in the chat. My details are in there, and also a link to the 3 reports that we're going to be referencing today, so you can have a look at those at your leisure later. And also, if I can ask you to keep your microphones and cameras turned off, unless you want to ask a question or contribute something, which I'd love you to do. It just helps with the recording. But also, please feel free to use the chat to ask any questions. You don't have to wait until the end to ask questions. Please feel free to do that as we move through today's session. Amazing. Let me just put the chat back up rather than the lobby. Fantastic. Thank you so much for everyone who's already introduced themselves. That's amazing. So what we're going to look at today, oh, I've skipped a thing there. So what we're going to look at today, January, we focused on planning and thinking ahead. February, we talked about resilience, capacity, and how we sustain ourselves in our trust fundraising work, especially when we've been feeling the pressure. Today, we're going to take a step slightly outside our own organisations, although we'll do some reflective looking at what all this means for us and look at the wider fundraising environment. So what I've tried to do is ground this session in insight from the Charity Pulse 2026 edition, as well as the 2 new granted giving reports that have come out this month, Complete Trust Landscape and State of UK Grant Making 2026. I'm not going to go through them line by line, so that's why I've put the links in the chat for you to go and have a little look through. But I've pulled out a few themes I think that are particularly relevant for trust fundraisers, and because the environment that we're fundraising in shapes how funders behave, that means we can look at this and plan our own strategies and what that means for our organisation. So before we look at that data, I wanted to start with a quick check-in. How are you feeling about trust fundraising for you right now? Is it clear and focused? Is it busy but manageable? Is it overwhelming? Do you feel stuck? You can think about that yourselves, or you can share a word or 2 or a sentence in the chat if you want to. And you can we can see how everybody's feeling. As always, there is absolutely no judgment here. It's just to get a kind of feeling for how we're all feeling about trust fundraising at the moment. I imagine it's quite mixed. Someone's just asked me to reshare the links from the top, so I'm just going to reshare those again for everybody. There you go, Gemma. They should be in there for you now if you can't see them at the top. So Rachel's feeling focused, Ruth is focused but feeling the pressure. Yeah, I get that a lot. Focused approach but a dry spell with several rejections from Juliet. Ed's feeling upbeat. Sarah's struggling to identify new to us funders, knowing that so many are oversubscribed anyway. Yep. Sam is busy, a little anxious about how the latest world situation could affect us. Absolutely, and we'll touch on that at the minute. Dale's busy at the moment, which is brilliant. Lots of opportunities available at the moment for us, which is exciting. Erica, that's amazing. Not something we've been hearing very often at the minute, so that's amazing that you're feeling that. Ian's feeling apprehensive about the year ahead and how much funders will be giving compared to last year. Absolutely, and there's some good, I haven't got this information here, but I think it was the CAF report that came out recently that talked about individual giving levels, and that those have dropped, and that will have an impact on where else we look for those sources, isn't it, to fill those gaps, I suppose. Cheryl, mixed results. Yep. Jessica, my issue is finding time to submit bids in my pipeline due to expansion of my role. Absolutely, always tricky. I'm partway through applying for this one. Erica's replying to Dale there. Yeah. Busy but manageable, some success, which is great. I think that success keeps us going, doesn't it? Bit apprehensive for later in the year. Liz is busy, trying not to get ground down by lower success rates. Absolutely. Hannah's trying to get to grips with a new role. Lots of work to do to get policy docs up to date. And I think that sometimes when we're looking at what we do as trust fundraisers, we think, oh, it's making applications and but there's so much more to what we do and how many hats we wear, isn't there, Hannah? As you're trying to get to grips with that new role and trying to get some of your policies and processes up to date, that takes us away from doing that trust fundraising work, doesn't it? So yeah, a really mixed there, and it's usually a mix of optimism and pressure, isn't it? And I think as trust fundraisers, we do have a certain sense of optimism. We put things out there, don't we? And we don't quite know the best of our ability. We've done everything we can, built those relationships, done the alignments, everything we can do, and we put it out there with a sense of optimism, because if we didn't, we wouldn't be putting things out there. And so I think as trust fundraisers, we do have that optimism, and I think that mixes exactly pressure and optimism what we'll see reflected in the wider data that we're going to have a look at now. So let me show you what I mean. According to the Charity Pulse 2026 report by Infuse, the majority of charities who answered their survey have seen income either grow or remain stable. 77%. 45% saw income growth, but the gap between higher income and lower income is now at its widest since their research began. So that's worth bearing in mind. The charities, 70% of the charities, and I can't remember off the top of my head how many charities reported this, but it's not going to be a wide kind of. It's a snapshot, isn't it, of the charity sector at a certain time. So that you have to take everything in context, don't you, when you're looking at reports like this. But it's interesting to see that a lot of charities are saying that their income has grown or remained stable. That's not what I'm necessarily hearing in some of the smaller charities out there, especially when you think about how many amazing charities have had to close because they're struggling financially. But what is interesting to me is that higher income versus low income is now at its widest, and I'm wondering if that some of those smaller organisations would fit into that. They've seen what they can do compared to some of the larger charities that are out there, be really, really stretched. A strong proportion feel optimistic about the year ahead, and again, I think that's where we all are as trust fundraisers, isn't it? If we were asked, as we did, we feel the pressure, but we feel optimistic about the year ahead, and we will do our absolute best. Public trust in organisations is rated very highly, 82%, but we must remember that this is the charities themselves reflecting on how trusted they are, how trusted they are in the public, and how I guess we've got to remember that how good are some of those charities are reflecting back on themselves at how trusted they are. But 82%, a little while ago we wouldn't have said that public trust in charities was very high, so that's a good place to be. And then at the same time, economic uncertainty is the biggest concern. 60% identified the economy as the biggest challenge. So we're looking at a sector that is broadly stable. If we look at these figures in isolation, reasonably confident, but operating with caution. And I think that combination is important for trust fundraisers, because trusts and foundations are really reactive. They're measured, they're thoughtful, and in cautious environments like this one, that thoughtfulness often increases, which can lead to changes, a lot of which we've already seen: short deadlines, trust closing early or taking longer to make decisions. We've seen a lot of that happening in the sector, and lots of are no longer accepting open applications at all. So when you're looking at this, just the snapshot of the data, would you say this data is reflective of what you're feeling within your own organisation, or does your own experiences feel different? Does it feel different? Because I think this is a very top line kind of overview of what a small percentage of charities are feeling, but how does this feel to you? How does this compare to how you're feeling within your own charity? Are you feeling? I mean, we've said that we're feeling quite optimistic. Do you think that public trusts in charities has grown? We've said when we were talking about pressure and how we're feeling that the economy, we've highlighted the economy is something that's playing on our minds with everything that's going on at the minute. So, I think we could say we do share some of these. I think it's this 70% of charity saw income growth. I think that's where I kind of go, is that reflective of where we are in the sector at the moment? Are we seeing those kind of levels of growth, or is it that it's more that we're remaining stable? So if trustees are feeling broadly optimistic but conscious of economic uncertainty, how might that show up for us as trust fundraisers? After all, a trust's financial stability and therefore ability to make grants depends on their investments doing well. In my experience, economic uncertainty at this stage doesn't usually mean funding stops. It might mean decisions take a little longer as trustees juggle their income versus their expenditure. Trustees might ask more questions than normal if they're interested in making a grant to double check your financial robustness, or the potential impact of their grant, because they really want to see anything that they're putting out there really make that impact and really, really work hard for them. Larger or multi-year commitments are scrutinised more closely or not offered at all. Sometimes I've seen that as well, that there's a restriction on the number of multi-year grants that are out there, and us as trust fundraisers are always trying to get those multi-year grants, aren't we? Because the trusts themselves aren't sure of how their investments are going to do in the future, so they don't want to overcommit themselves by making those multi-year, longer term funding. Let's have a look what we've got in the chat. He says, I can't honestly say we're feeling optimistic for trusts and foundations, more resigned that it's tough. We also didn't see growth last year for sure. Yeah, absolutely. Sam says, my trustees are optimistic. Absolutely. Love a trustee that's optimistic. Interested to see so many people feeling optimistic. We're seeing more trusts and foundations close or pause until this stabilizes. I'm not sure I can say I'm optimistic, although I do think we'll hit our targets. Absolutely. And we'll talk about this, about us being realistic as trust fundraisers about what's out there and what we can do. Anna, we're definitely not seeing growth, but having new CEO, so he's bringing fresh optimism, and that can absolutely help. And I think, like we've said, us as trust fundraisers are naturally optimistic about what we can do, even if that's recognising, like we said, that it's tough out there at the moment, isn't it? So I think one of the most positive findings in the report is the strength of public trust. It's reassuring, but in trust fundraising, we can't rely on that resumed trust. We have to evidence it. So when funders are cautious, they tend to fund organisations that feel stable, competent, and accountable. So the question becomes, does your application language actively demonstrate trust? So think of a sentence you often write. So I don't know, I've seen a lot of, we support 250 families each year, something like that. It's fine, it's quite neutral. How could you strengthen it to signal reliability? So perhaps you could say, last year we supported 247 families, being really specific, exceeding our target by 12%, with 91% completing our programme. That subtly communicates achievement and delivery. You're showing you're a safe pair of hands. In cautious environments, funders don't just fund need, they fund certainty. They want to know you're a sure thing. So when you're looking at your applications, does it clearly show delivery track record, financial control, measurable outcomes, and a strong governance? You don't need to do your whole kind of application again. It's just looking to see whether you can fit some of these things in to kind of make sure that you're being seen as a trusted organisation when things feel a little bit uncertain. And then the report shows that 60% identified the economy as their biggest challenge. The economy can be one of the biggest factors that affects a trust's ability to make grants. Many grants are grant making from endowments. Their annual grant budgets are often linked to investment performance. So when we see global instability, the war in Ukraine, the conflict in Iran, political shifts, the market being really volatile, those affect markets, and markets affect investment returns. And that might not be something we see at the minute. We might see trusts, like we said, not making as many multi-year grants or spreading their the grants that they're making will thin. I've heard a lot of charities that are saying the ask they made, they were awarded lower than they had asked for, and sometimes that happens when trusts are looking at what they're giving out and they want to give lots of impactful grants to a lot more organisations, and they want to make their money stretch further, particularly if they're worried about how their investments are going to be done in the future. So it's just looking at ways that we can make sure we're taking all of this into consideration when we're doing our strategy and we're looking at our pipeline going forward. They might protect their capital, they might reduce their grant budgets, they may hesitate on those larger multi-year commitments. As we've said, they may favour one-year awards over 3-year funding. And it doesn't happen across the board. Some organisations will do really well, some grant makers will do really well, but it does shape the general confidence that we're feeling in the sector. So when you're planning those multi-year asks or capital bids, it's always worth asking, is it the right timing to do that now? Have we been able to have a conversation with our funder to see if that's the right thing to do? Have we built flexibility into our ask? Do we do, shopping lists so they can choose what they need to do to fit the funding that they have to give? And have we looked to see if there's any alternatives in our pipeline that we need to be working up and bringing up to make sure that we've got what we need ready in our pipeline to go. So this is about understanding funder context. It's not about panic. It's about awareness so we can start looking at our strategies and make sure everything is in aligned and we have everything we need in our pipeline. Let me just flip back to there. So Ed says we've tripled our trust income from 500k to 1.8 million in the last 2 years. That is amazing, Ed. No wonder you were getting so many. Congratulations. All done by targeted applications, good research into new funders that match our objectives, which is absolutely, if you've come to these Let's Chats, absolutely what I've been saying is the right approach to take. We don't have a scattergun approach, especially as most funders get inundated by so many new charities because of the list and AI. Absolutely, completely agree that that's the way to go, and being brave enough to be able to go, we're going to target our applications and not just go out there. Yeah, Rachel says I would add rising costs as a big economic concern. Absolutely, definitely. Everything's going up for all of us. I did my weekly shop this week, and some things that I normally buy had gone up by like £2 already from last week. I was like, that's just so unsustainable, isn't it, for us? Because my wage isn't going up to reflect any of that, and that's without adding in increased petrol prices, increased the cost of heating the home prices as well. So a rising cost is absolutely a big economic concern we need to take on board too. So we just talked about economic sensitivity and how investment performance can shape trustee confidence. So let's have a look how we can bring that into your planning. So if you think about your top 5 prospects for this year, if 2 were delayed, reduced or declined, what would that mean for your income? It's all about, as I was saying, making sure your pipeline's balanced and exploring all those opportunities, prioritizing those warm contacts and those where you're most aligned to the trust, just as Ed has proved works for his organization and what he's doing with his Trust and Foundations program. Do you have the right trusts at every stage? Those that are already warm, those that you're warming up, those that you're exploring, those that you're prospecting. So you're always moving people through your pipeline. And if anything were to drop out at the top, you've got some prospects that you're working on, that you're warming up to move up into your top 5, because we know what trusts are like. They can be very fickle, and someone you think that you've absolutely got a really warm relationship in, that relationship can suddenly stop, or they might pause for a couple of years to give other organizations a chance. So having a pipeline that you can move people up and into your warmer top spots is always worth doing, and that alignment is absolutely key. So in the report, corporates, events, individual giving are all identified as growth areas. Trusts and foundations are not singled out as a significant area of expansion. I don't think we would expect, particularly across the board, apart from Ed, would see that as something that is particularly on our radar, where lots of people are going to suddenly look at trusts and foundations as a place where it's going to really help you get out of a hole. But that doesn't mean there isn't opportunity there, but I think it's just not been identified as a growth area as much as some of the others. I think for the last few years, lots of organisations have leaned more heavily on trusts to compensate for that loss of local authority contracts, the pressure on statutory income and the need for core funding. That all seems to have been something that we've looked and turned to trust and foundations for. But the data is suggesting we shouldn't assume trust will naturally expand to absorb that pressure. And does see we have struggled more with corporate support recently. Actually, I wouldn't have put corporate support on this predicted growth income area. For me, corporates will struggle just as much with their investments in people because of the cost of living being a concern, the economic concern being exactly the same for them. They're investing in their businesses, in their people, in their employees, just the same as a trust would do. So I agree, I wouldn't necessarily have put corporate on there, but this is where the Enthused report has come out. And this is why I was saying, reports like this are so good to take on the information, but I think we have to look at everything in context of what we're seeing and feeling in our own organisations and use these as a guidance tool rather than something we beat ourselves with, because it's very, very different for every organisation and what you're seeing on the ground. And I think this is where I want to bring in the new granted giving reports that have come out this month. I definitely, absolutely have a read through of them for yourselves. The links were in the chat earlier if you want to go and have a look. The reports have analysed over 20,000 UK grant makers. And there's some genuinely useful data in there. But what I want to walk you through is what it actually tells us and where I think it falls short. And that's not a criticism of the report. That's just there's some context that we can put in for our own organisations and some of the things it doesn't tell you that I think is really important to take all this in at once. So the headline figure is that 17.3 billion is distributed annually across the UK and trust and foundation sector. That sounds like really, really great news. But when you have a look at it, 100 funders control 58% of that money. So by the time you get to the top 5%, you're accounting for 87% of that money. So the pool most of us are actually competing in is far smaller than the headline suggests. The headline is amazing, and knowing that there's that much money out there for us to go after is really, really encouraging. But for most of us, we wouldn't necessarily be in that top pool, and we're probably somewhere in the middle where it probably feels a little bit more competitive. The second figure addresses something the sector has been worrying about, the loss of funders. Since 2020, 818 more funders have closed than opened. But when you adjust for what's called the spend out effect, where large funders distribute their remaining assets in a final burst before closing, inflating their last year's figures by around 51%, the picture then changes. So if you strip out that distortion, and new funders are actually bringing in somewhere between 379 million and 526 million more annually than those that have closed. So that is really, really positive. It's still a really, really positive figure. And we'll have a look in a second what sectors are affected by that. And you also have to take into account that higher figure includes Scotland. So that data might need a little bit more careful handling, because Scotland is sometimes a little bit of a different sector to compare against the UK. Helen says, hi, will this presentation be shared afterwards? The presentation itself won't, but the recording of the presentation will be, so you'll be able to go back and have a look through. But I would also absolutely recommend downloading all of the reports that I've referenced today, particularly the granted giving ones, to have a little look at. So I think, and it's clear when you have a look, in expenditure terms, this is consolidation. It's not decline. There's some really, really positive things in there. And one of the most interesting things I thought, and I've never looked at a statistic like this before, is that nearly 43% of funders exclusively back one theme. So those are your highest probability targets. You're only competing within your own cause area, not against the entire sector. So if you're not already prioritising single theme funders in your pipeline, that's a trend that's really worth looking at more closely, and not something I've particularly seen from what I'm doing in my own work. Lots of funders seem to have 3, 4, 5 different things that they're focusing on. So it's really interesting that actually there's 43% out there that are looking at just one theme. So if you can look through your pipeline or do your prospecting research and identify those that fit, that might be a really good place to have a look at. That might be some untapped potential for you. And then competition varies enormously depending on where you work. So armed forces charities face fewer than 3 competitors per funder. Recreation charities face over 30. That's a tenfold difference. So if you're treating every sector the same in terms of how much time and resource you put into each application, you're potentially comparing yourself against a very different ratio of success, which is why this information is always amazing. It's so good to have this at our fingertips that we can absorb it, but it's always worth looking at anything like this in context for what difference it makes to your organisation and what it means for your organisation. But what I think most importantly, both reports, both of the granted giving reports, the complete trust landscape and the state of UK grant making, are entirely supply side. They tell us about funders and they tell us about the money that they have. What they can't tell us is anything about what's happening to success rates. And that's what I want to have a chat with you about in this next slide. Here's what I think the report can't see within the data that's being used. AI and application volumes. Neither report measures how many applications each funder receives, and sector evidence and, anecdotal evidence from when I've been to some conferences recently where they've had grant makers there talking about AI. They are saying that AI tools have dramatically increased the submission volumes, which means success rates might be falling even as total funding rises. So if they've got more money to give, but more people are applying for that funding, it kind of cancels itself out a little bit, doesn't it? And those trust funders are saying the AI applications that they're getting just don't have that human voice behind them that they want to see as well. So that's something to bear in mind if you're contemplating looking at AI. Trust absorbing other losses. So charities don't fundraise in a vacuum. Statutory funding cuts, squeeze individual giving, contract income loss have pushed more organisations into grants. I know lots of smaller organisations where they've lost local authority funding are now looking at trusts and grants to fulfil that gap. So the demand side pressure isn't visible in either of these reports either, to give us that little bit of extra context. And then the health and overseas aid pipeline is collapsing. So overseas aid is the starkest example. 15.6% of closed funders listed it as a theme, but only 1.5% of new funders do. So that's a huge loss in that sector, and health is said in the same way. So expenditure might be growing, those funders that fund those sectors might have more money, but more people are asking for that money, and there are no new funders coming into those arenas, or far less funders than we're losing coming into those arenas. So the amount of money available is shrinking in those areas. And that's really, so you look at those headline figures and think, amazing, there's all this money for us to go out there for, but in some sectors within our landscape, though, they are genuinely shrinking the amount that there is there for us to go out for. And that's something you need to bear in mind when you're looking at your strategy and looking at your pipeline going forward. Are you in one of the sectors that are affected, health and overseas aid in particular, are where they're feeling the squeeze? And then it goes back to that spend out distortion that I talked about before. 21 funders in the 5 million plus band collectively spent 292 million more than their 5-year average in their final year. So if you're looking at how much money got put out there, you have to take in account that those those funders that were closing had more money to spend because they were closing out. So that does inflate how much money is actually out there in the sector, rather than, that's not necessarily something that's going to continue year on year, because those funders that have shut won't have any more money to contribute to that number in the end, if that makes sense. So we have to take in that kind of spend out effect that might be slightly inflating the amount of money that is out there as well. So I think these reports absolutely have merit in our sector, and they are an absolutely interesting read. I would just say the forces that we see as trust fundraisers that are driving down success rates, AI, income stream pressure, sector consolidation, aren't all captured in this information. It's absolutely not impossible out there. Ed is proving that with his amazing income, but it certainly is harder, and it certainly is harder in certain sectors. And that's not necessarily that trust and foundations are in crisis, but I think it's us adjusting to a new landscape, and that might not be one where trusts and grants can fulfill all those lost income gaps that we're being asked to find. And I think that might lead us to having some tricky internal conversations about what that might look. I always absolutely have faith in trust and grants. It has never ever let me down in all the 20 years that I've been working in it. It just might mean we have to look at how we fundraise from them differently. And like Ed has proved, that alignment and that kind of concise looking at what we're doing and adjusting what we're doing and building those relationships and making sure we know what's in our pipeline and using it really well is how we need to go to move forward. So let's have a look at some of this in practical terms. Firstly, if there is that realism, if trusts are operating steadily rather than expansively, particularly in those areas like health and overseas aid, targets that continue to grow at pace might not reflect the sector conditions, particularly when you factor in those points that we talked about on the previous slide. Secondly, there's the pressure management. Many trust fundraisers I know are being asked to fill the gap when other income drops, but if trusts aren't expanding significantly across the whole sector, then that expectation needs to be balanced. And then there's strategy. If other income streams are predicted to grow, that might relieve some pressure on trust being the sole solution. Fingers crossed, let's hope so. So this is helpful context when setting targets and managing those expectations internally. I think reports like this and looking at them against your pipeline and the adjustments that you need to make are really interesting when you're having those internal conversations. Because I know what it's like when you're feeling the pressure from top down because they're feeling the pressure to find that income, then it's hard to have those conversations, isn't it? But I think if you have a robust pipeline that can show what's out there for you and your organisation where you are at the moment, and then ground it with what's happening in the wider sector, that can really help you to have those conversations about some really realistic targets for your organisation. And then if trusts aren't expanding rapidly across the whole sector and that economic caution exists, then for me, relationships become even more important. Relationships and alignment. Trustees will fund organisations that they feel confident in, and that confidence builds over time. So stewardship and cultivation isn't a nice to have anymore. They haven't been for a little while, if we're honest. They're proactive, and you need to make sure you build in time to build those relationships both before and after your ask. It's so important now to make sure that you have those relationships, you have that pipeline that has those different stages of relationships that you can build and you can move up and through your pipeline, as we've talked about, and that you're making sure things are really, really aligned. And then that links back to something we talked about before. Are you using your pipeline as a thinking or as a forecast tool? So if your pipeline only shows amount, deadline, probability, then it's a forecasting tool. You're purely looking at it from a financial point of view. But if it tracks relationships, the relationship stage that you're at, your next actions, what your stewardship plan is, your kind of saw this and thought of you moments, then it becomes a thinking tool, and that helps you to pace your cultivation so you always know where you are with a funder. It helps you plan your reporting. It helps you identify your renewal windows earlier so you can start planning and having those conversations, and it avoids you having to be reactive to things. You can pre-plan, you can have the narrative how you want to have it for your organisation. And I think in steady but cautious environments like I feel like we're in at the minute for trust and grants, proactive relationship management reduces that risk because you're having those conversations with your warmest funders. You know how they're feeling, you know what your next steps are going to be for them, you know if that multi-year funding might be off the table for the next couple of years, and then you'll be able to adjust your pipeline and your strategy and start bringing up, like we've said, some of those ones that you need to start cultivating more to fill those gaps. And then the report also highlights from Enthuse, this is strong interest in AI, not necessarily just in trust, this is across the board in fundraising, but relatively low confidence in adopting it. And I think that makes sense for trust fundraising. AI can absolutely help you structure applications. It can help you summarize guidelines. It can help you refine your language, particularly when we're staring at a blank page for the first time. But what it can't do is understand funder nuance. Only you can do that as the trust fundraiser having those conversations. It can't interpret trustee dynamics. Yes, Erica, I find AI so useful to fit word counts. That's exactly what I was trying to think of the words. Absolutely does help you be really refined in what you're trying to say when you're in a word count situation. But it can't replace relationship insight. We can only do that as trust fundraisers. And in cautious environments, human judgment becomes more valuable, not less. And we're hearing this. If you've been to any of the conferences lately where we've had funders there, they are seeing and can see a mile off where a whole application has been written by AI, and they are saying that it's lacking that human voice that gets them to say yes to that application. And that's a real shame, isn't it? Because we're all amazing trust fundraisers, and there's amazing writers, and we have honed our skills for many years. And I'm not saying AI is bad in any stretch of the imagination. It's a really important tool for small organisations, people who wear many hats, and trust fundraising is one of the ones that they have to do, and they're feeling the pressure to do it. And using AI feels like a really good way to not cut some corners, but get where you need to get with very a limited amount of time. And what I wanted to check with all of you as trust fundraisers, are you feeling pressure to use AI? Is this something that's coming down to you from your organisation? But I suppose I'd say, is that really what our sector needs at the moment to help us stand out? I think that human, passionate voice and those relationships is absolutely what's going to help us stand out. So are you feeling the pressure to use AI? Carl says, I use AI all the time and love it. It's amazing. Helen, I find it really useful in absorbing a trust annual accounts and donations to create a pattern of giving. Yeah, Ed says, I only use AI to make up bedtime stories for my kids. Helen analysed giving patterns. Carly says, no pressure to use it, but I do find it an incredibly useful tool. Yep. Erica, I've not had pressure internally to use AI. That's amazing. Some organisations that I've been working with have felt the pressure to use AI to make themselves more efficient. And I absolutely think that in some ways, like we've talked about there, it can absolutely help us be more efficient in what we're doing, doesn't it? And I don't feel like I'm being forced to use it. I'm worried about the environmental impacts of AI, although there are more eco-friendly alternatives. Rachel, no, I'm not under pressure. We're only just developing an AI policy. And I think that's really important, isn't it, to understand not only externally how we're using AI, but also internally how we are expected to use AI, and what's safe for our organisations and what we decide compared against our values that we want to use AI for. But that's good that no one's feeling any particular pressure. I know some organisations are feeling pressure to look at the use of AI. So I'm really glad to hear that you're not, but that you're finding it useful in the context that you're using AI in. That's amazing. So where does all this leave us? We're not in crisis. we're not in bloom, especially in some areas. Some people are doing really well, some people are really struggling in the sector that they're in, but I think we're in steady cautious confidence, and I think that's where we often are, isn't it, in trust fundraising. I think for trust fundraisers, this means demonstrating reliability. I think that means managing risk. I think that means setting realistic growth targets. I don't think we shouldn't look for growth in trust, but I think that growth needs to be realistic depending on what we're seeing in our pipelines and what we're seeing for our particular sector in this data. I think we need to be protecting our relationships internally and externally. And I think we need to be planning thoughtfully rather than reactively. And I think that's strategic maturity. I think that's looking at where the sector is now, taking in all this information on what that means for our own organisations and adjusting ourselves accordingly. So I'd love you to leave here today with one clear decision, one adjustment after you've heard all this information that might strengthen your resilience or strategy for 2026. Is there anything you might want to do? And I know we started with asking this question, but has this information helped change the way that you're feeling about 2026 now? Has it made it worse? Has it made you think I need to go away and have a look at these reports myself and see how that this data feels for my organisation, how it might impact on my organisation? Has it made you feel empowered to have some internal discussions about what some of this reflection might mean for your targets, for your strategy this year? I'd love to hear how this is feeling. So Carly says environmental and social impacts need to be considered, hence the boycott of ChatGPT. Absolutely. I'm currently trialing Claude at the minute to see, because I have also moved away from ChatGPT. I don't use it for any of my application writing. I use it to help give me some guidance and to help kind of, if I have a lot of information that I need to digest, then it can help me kind of consolidate that and have a look at it. Erica, I like Claude, been using that a lot more than ChatGPT. Me too. It just feels a lot more intuitive. And whereas I find ChatGPT seems to be a lot of, yes, you're amazing, Stacey, well done, this is great. Claude is a little bit more kind of, I think we could do it better. I think we could do this, which is kind of what you need. So you don't want someone that's always saying, oh, that's great what you've just written, and not really analysing it for you. I mean, I think when talking to managers, I will be emphasising the risk over reliance on trust and foundations. Diversification will help us become more financially sustainable. Absolutely. Hannah, I think that's really important for any organisation, isn't it? And I think trust and foundations were always seen as the easy money, the easy way that we could go out and get project money, and we didn't need to really put much thought into it. But I think that's changing. I think for me, trust and grants, trust and foundations is becoming more akin to major donors, and having that relationship mindset when you go into trust fundraising is really important at the minute. And I think particularly if funders are telling us that they're receiving more applications written by AI, how do we stand out? We stand out by making those human connections. We stand out by making sure that what we're putting forward is really sounds like a human when we're writing it, because we're impassioned by what we're writing, and we are the people who absolutely know these projects inside and out, how to present those to a funder. I think it's really important. I think when you're looking at all of that, that's the thing that I take away from this, is that those relationships really matter, and sounding like a passionate human being is really going to help us stand out in a crowded market. Erica says, one thing I'll take away is to try and make our trust and foundation spreadsheet more relationship focused. Absolutely, highly recommend it. Even if you have a CRM system, sometimes it's really hard to see those relationships and where you are with those relationships when it's all inside a computer system, but laid out on a spreadsheet with those contact points, your stewardship points already laid out for the entire year. It doesn't have to be anything complicated. And if you're already in with that funder and it's a nice warm relationship, ask them what they'd like to receive. Lots of organizations just want to get the end of grant report. They don't want anything fancy in between. Some like to be invited to your events if you have them. Some like to receive your annual review if it comes out. Some don't want anything glossy like that. So it's another contact point, isn't it, to be able to go back to them and say, thank you so much for your grant. How would you like to hear from us for the rest of the year? It's a really good way to build that relationship. Gemma, I feel I need to be more focused in research and pipeline. The single issue thing is interesting, but hard to take a step back and do that when always have the next deadline to hit. Absolutely. And I think we've talked about this in sessions before. It's really important that you try and give yourself that time. You try and work that time to do some more research and make sure that your pipeline is really focused with alignment, because it will help you further down the line to be able to do that. And it's really hard, isn't it, to carve out that time when you've got the pressure to put those applications out there and bring that money in. But honestly, it will really help you down the line if you can be more focused, and if you can strip out some of those some of those funders that have been sat in your pipeline for a very, very long time, and they come round and you put the next one in and you put the next one in, not always seeing whether they're absolutely 100% aligned as you would like them to be. If you're looking at your a more focused pipeline, that is, you've put in priority order, and these are the ones that you need to focus on. These are where you need to build that relationship. It will absolutely help you see that you're spending your time in the right places as well. Gemma, although I know the women and girls sector gets a very small percentage of grant funding, so suspect there aren't many single issue funders for us that we don't already know about. Absolutely. And again, this is why it's so important to use these reports in the context for your organisation. There's been lots of debate in the Trust Fundraising Hub, if you're part of that over in Facebook, talking about these two granted giving reports in particular, and how it's been a lot of doom and gloom in the sector, but actually this shows that there's so much potential for growth out there, and how good it is out there. But actually, in the context for you, Gemma, there's already a very small percentage of grant funding out there for the sector that you work in, within the wider charity sector. So if you put that context and overlay it over these reports, then actually you might not be feeling as optimistic as someone like Ed, who has put in such great things into his trust program. It's probably in a completely different sector where there is absolutely more room for growth, and maybe some of those new funders that opened are focusing in that sector. If you work in the kind of refugee sector at the minute, there's quite a few grants that have opened for that lately, or homelessness. So, but that changes. By next year it could be something else that's flavour of the month, and organisations that were doing really well might find that that has shifted for them. So this is why we need a really robust pipeline, that you have those people at different stages, so you're never over reliant on one particular funder, because these things can change. And again, this is why it's so important that these reports that come out that are amazing, and suddenly we get lots of things about why is everyone moaning about a crisis in the trusts and grant sector. This is showing us that there's lots of things out there for us to go after. Actually, when you overlay your own context to these reports, they can start looking very, very different. Reece said, I've seen you on LinkedIn recently talking about the importance of building, strengthening relationships with funders. I'm finding increasingly that many trusts just don't want to be contacted or bothered. You can't just pick up the phone and talk to them. I take my hat off to those whom this approach is working. What am I doing wrong? It might be that just the trusts that are in your particular sector aren't allowing you to pick up the phone. I'm still having some really, really good successes with that, and I don't know if Jessica's here, but she put a really good post on LinkedIn this week about the successes she'd had with picking up the phone to some funders. So it could just be that you're unlucky that the particular, sector that you work in, your particular charity focus, the funders that you're looking at won't allow you to do that. So if that's the case, then I'd be doing some trustee mapping and see if you can find some warm ways in that way to try and get some relationship building going. Also, meet the funder events. If there's any meet the funder events for trust that you're interested in, that you think you're really, really closely aligned to, then absolutely going on to look at those too and get yourself known and seen and heard that way. Make sure that you are findable in what you're doing. Make sure that you're showing and shouting about your impact on your social media, on your website, so that if people are looking for people to support, then you are there. You are top of the list for them to start to have a look at. Are there anybody in your organisation that can do some talks within your kind of charity sector focus that can get you better known and seen and heard? It's, you need to look at every way that you can get your organisation noticed in a really, really crowded market. And that might be, Hannah, as you say, I was thinking our best relationships are more local or directly aligned funders. Absolutely. It's looking at those directly aligned funders, isn't it? And making those your absolute priority. And going through and seeing what you can do there. I absolutely recognise that it's getting tougher to speak to trusts, particularly over email, but I would definitely say there's still some merit in picking up the phone and trying to speak to them where you can. Thank you, Jess, for replying and saying, there's small local funders that I've been talking to, but you never know where that relationship is going to go. You had, Jessica, some really, really great conversations with those funders, and there's been lots of times in my career where we've had some modest funds come through from an organisation, and we've stewarded them and we've looked after them. We've had a really good relationship with them, not big players, local ones where they've just given us a small grant, a decent amount. But when they've closed, we've really, really, really benefited from that organisation because we've had that really strong relationship with them. So you absolutely never know where these relationships are going to go or how these trusts are connected, and lots of trusts share trustees as well. Helen, what advice would you give to organisations setting up a trust pipeline from scratch with no existing relationships in this current market? It's tough, but not impossible, Helen. I would absolutely focus your time on doing some really, really good prospect research and making sure that you're prioritising those where you're really, really aligned, and start reaching out, start doing some network mapping with your trustees, with your volunteers, if you have any ambassadors. Really, really drill down which are your, top 5, top 10, take them to your trustees, see if they know anybody, start picking up the phone and having a look at them. But firstly, focus on prospect research where they're absolutely aligned with what you want to do, and just have a go and get it out there. There is absolutely still merit in having a trust program. All the things that we see out there, it is absolutely tough at the minute, but that doesn't mean that there isn't funds out there for us to go after and to get. But do some really, really good prospect research, picking out those where they're really, really aligned, maybe having a look at some of this single priority, which I am going to go and have a look at, and seeing whether there's some merit there for your organisation. And again, it all depends on the context of the sector that you're fundraising within, what your organisation is doing, as to how much or how little you'll find out there. But absolutely, and you don't necessarily have to pay for a database at this stage either. Charity Excellence Framework is a really good place to have a look. The Charity Commission itself has a search function where you can tick the box to say that you just want to look at those that make grants. So don't feel like you have to spend money on expensive databases at the moment. And a really good one, if you wanted to have a look at it, is Grin. I'm sure other people will offer you suggestions as well, what they find really good, but that's a nice affordable one, and you get daily updates as well. So I would look at the free things first, just to give you some context before you invest in anything else. But research, alignment, building those relationships will be absolutely key. And Jess says, I'd say really good at searching very well in Charity Commission and start calling local potential funders and look for Meet the Funder events. Absolutely. Cheryl, Meet the Funder events, lots of them are advertised over on Eventbrite. If you have a local community foundation or a local CVS, they're also a really good place to have a look. As Hannah says, for some Meet the Funder events. And on the 1st or 2nd of every month, I always on LinkedIn post any Meet the Funder events that I have found for that next month. So you can always follow me and have a look there for some of those as well. Ian, just out of interest, do you know whether grant making trusts talk to each other much? Yes, a lot of them share trustees. If you ever have a look at the Charity Commission, and it often shows you the other trustees and where they're linked to. And the what's the name of it now? It's going to completely fall out of my head. Is it grant makers? They often bring funders together to discuss issues. And I know, again, from some of the conferences that I've been to, funders have been talking about how much AI applications are affecting the volume that they've seen coming through. So yeah, a lot of, particularly the bigger ones. I mean, especially local ones. If you're working with a local community foundation, they often overlap and have lots of conversations with each other as well. So yeah, you'll be surprised how much trustees talk amongst themselves. Erica says, look at your local community foundation as they manage funds. Really good to build relationships with. Yeah, absolutely. That goes for Helen before, which is just setting up. Let's have a look. Anna says, definitely going to get engagement plans set up on our CRM. Absolutely, really good. Brilliant. Yeah, Hinchilla is also a good free alternative. They do daily emails, although I will say Hinchilla, absolutely brilliant. Their daily emails are really, really helpful. But there is, they do want you to sign up because they are essentially an AI research tool. So they do want you to sign up. So you might get some marketing emails, but you can just ignore those if you get them. Yeah, Sarah says some areas have funders forums where they discuss issues, etc. So yeah, there definitely is a lot more conversation than you probably think going on behind the scenes. Amazing. Thank you so much, everyone. Can you believe that as our hour has gone by absolutely so fast? I really, really hope you found this session useful and you've got lots to think about and go away. Absolutely, please do have a look at those reports for yourself and just bear in mind the context for your own organisation's situation. And if you wanted to have a look or have any questions outside of this session for me, please do drop me a line. I'm always over on LinkedIn, or you have my email address from this session today. As I said, the recording will be sent out to you in our newsletter on Monday. You will all subscribe to that newsletter. I think you automatically get subscribed. Our next session, just for your information, will be on the 28th of April. The sign up for that isn't yet available, but we're getting on that ASAP, so you'll be able to sign up for that, and we'll be looking at some more of this relationship building side of trust fundraising, as it's so absolutely important at the minute. So thank you so much everyone for your time. Have an amazing rest of the week and hope to see you all in April. Take care everyone. See you later. Bye now. Bye.